Good morning, good afternoon, good evening, folks. Michael Zuber, one rental at a time, back with Matt, the mortgage guy. We are going to talk about the three possible CPI scenarios tomorrow, folks. Tomorrow, CPI comes out, and it is going to be a big, big number, meaning a very important number. Matt, it's going to be fun. What you
Yes,
got?
sir. I mean, and I haven't looked forward to a CPI more than this one, right? Because I truly think like this is the one that for those of us who are optimistic and are hoping, really for client's sake and for affordability's sake that mortgage rates will start to head downwards. We are of the camp that, inflation is going to start to tame down. This CPI number is going to come in low enough to where the Fed backs off, for lack of a better term. And so, yeah, it would be cool to go through like the three scenarios, which are basically within expectation, below expectation, or above expectation when it comes to tomorrow's reading and what that would do to mortgage rates.
So let's do it. So for folks that don't know, and this video will come out at 7 o'clock tonight. So this will be before CPI comes out. Expectations are currently for headline to be 8%. It was 8.2 the month before. The expectation for core is 6.5, where last month was 6.6. So both of these are expected to be low. I will say, I think for the last 4 months, they have been flat out wrong and low 4 months in a row. But you're right. They're either going to be low again, they're going to be on target, or they could be high. So I know you did some work about these three scenarios. I thought you would lead this and I'll react.
Yeah, for sure. Because the people that I'm speaking with and following aren't just guessing that it's going to be low because we're optimistic about that positive effect on mortgage rates. But the readings, when they look at these things year on year from last October, November, December, like the month on month, off memory, like 0.5 or 0.6 for all three of those Q4 readings for last year. So like a monthly increase of 0.5%, which annualizes to 6% over the year, is within expectations what they expect to see tomorrow. And so if it comes in, like you said, at 8.0% top line number, then there's probably going to be very little change to the mood of the Fed, the market, and that's stock market, mortgage market, all of those things considered. If it comes in with a slight decrease, which is what is expected, right? So just because inflation comes in and it shows, top line down to 8% and core down to 6.5%, doesn't mean that that's going to be necessarily good, because that's what's expected. Mm-hmm. And I think that's like a lot of things we look at where, the Fed does a 75 basis point rate hike. Well, no shit. We all knew it. I've talked about it for months. And so in regards to CPI, that would be very little market moving if it just came in where we thought it was going to be, slight decrease.
Yeah, it's kind of interesting because, again, I've been watching this for a long time. I've been calling numbers on it, and generally speaking, but doing pretty darn good on this number. I have to tell you, actually, I think the market certainly is calling 8 and 6.5. I think there's a general feeling that it will be high again. So I actually would tell you, if for whatever reason the number came out as expected, meaning 8.0 and 6.5, there would be a like a pause, like oh, finally. I think they would actually call that a little bit of a victory. And yeah, I think the worst case scenario is anything that goes up. So it was 8.2. If it goes up to 8.3, which, oh, by the way, is what I'm calling, and it goes up, it stays at 6.6 or goes higher, which I'm calling. So again, I'm on the high side. I think anything below the market does okay. But let's be clear, if we get a 7, like 7.9, 7.8 on headline, watch out. The market's gonna go nuts.
And that's what we'll talk about. We'll talk about if it comes below expectation and we're down in the 7s and core is lower than 6.5. If that is the case, my thought is that you start to hear things from the Fed like inflation has peaked. It's on its way down. What we're doing is working. And it will give them permission, whether they do it or not, it will give them permission to say, you know what? A quarter in December might be enough. Or they might continue and do 50 in December. But when they start talking about 2023, they're not going to have to get above, the 5%. What do they call that? They call that the
target, the terminal rate.
Terminal rate, right? Yeah. Couldn't find that word this morning. Maybe more coffee.
Yeah. So that's actually that is the game. So first off, let me be clear, because I just like, if let's say we got 7-8, which is kind of the best case scenario, I still think we get 50. December is either 50 or 75. This talk of a quarter, stop it. You kid yourself. Just stop it. Stop
All right,
it.
50. You can have 50.
That's the only game in town, 50 or 75. But I do think you're right, because right now, I think Powell's telling us, we're going to 5.25, 5.5 terminal rate. That's not my call. My call is they're gonna stop at 5. But we get an 8.3, 8.4, 8.5 headline. Oh, we're getting a 75, and we're going to get talk of another big one in January, February. So I do think you're right. I think tomorrow is an important day. Basically, can the Fed take their foot off the gas pedal or not? They're not going to put their foot on the brake. That's not happening. This is just, can I lift my foot off the gas pedal?
Right. And that would be the final thing, is above expectation. 8.4, 8.5, and it's continuing, right? Like, for anybody who is wondering how could we get to 8% mortgage rates, that would be it, right? Comes in at 8.5. The Fed says, you know what? Like we knew we were dealing with a big beast, and we got to continue to be aggressive, and they'll start talking about getting the terminal rate to 5.25 and not just 75 in December, but what they're going to do in 2023. And that would be what would cause mortgage rates, for some of these people that are targeting the moon of 10%, it's going to head that way if, inflation readings continue to come in higher than expected. And so, that's kind of worst case for somebody who's worried about, mortgage rates and where those are headed if it comes in above expectation. And you're saying your guess is 8.3?
So I'm above expectation. Expectation is 8. Last month was 8.2. I'm calling 8.3.
Okay. I'm calling 7.8. He's not laughing at me, guys. He's laughing with me.
Yeah. No, that's at you.
Oh, it's good to have friends. It's good to have friends in this world.
But let me be very clear. I hope you're right. For the economy, I hope you're right.
Yeah.
I
really probably have done less economic digging and research than most, truth be told. I'm worried about loan structure and other things besides this. And so I probably see it through a little bit of an ignorant and biased lens, where I'm like, oh, it looks like used cars are down year on year. It looks like some other things that go into these inflation numbers are down. Maybe we get a better reading, but I'm an optimist.
Okay. Until tomorrow at 5:30 a.m. Pacific, no one will know, or very few.
I might be a
will
genius tomorrow, Mike. This
You
thing
could
comes
be.
out tonight, and I might just be a genius.
Dude, I might have to publicly apologize to you tomorrow in my daily financial news, Matt. I laughed at you so hard I almost wet myself.
You know what is really fun? If you haven't checked out Matt the Mortgage Guy on YouTube, there's more crazy calls like this. I recorded a video yesterday. I talked about what I thought was going to happen. My team's going to edit the video and release it tomorrow, whether I was right, wrong, or way off base. And so, Mike can laugh at me. The world can laugh at me. But in order to do so, you got to go to Matt the Mortgage Guy on YouTube.
There you go.
And, I enjoy some of the conversation that doesn't necessarily align with my thoughts. I had 2 calls I set up this week, Mike, with people that I disagree with. And it was cool. I really enjoy having those conversations because, somebody was being public about a loan product that they didn't like. I mean, it's the 2-1 buy down. And I said, let's jump on a call. See his points, and we just had a good conversation. Wow.
When you are open to listening to the other side, you actually get better.
Yeah.
Right? As long as it's not name calling and just toxicity. If you just listen to the other side, you can actually get better at your points. And when I do that, it's really weird that sometimes it's only vocabulary where the discrepancies are. It's like, I interpret this word this way, you interpret that word this way, and it's our filter that's different. It's an amazing thing when you can step up and have a great conversation with the other side. I encourage it.
Yeah.
That's awesome.
And it was funny too, because I had this conversation with the mortgage exec, and we basically were on the call and realized we pretty much agree, right? But then if somebody saw us on social media and just took it at face value, he thinks this way, he thinks that way, they're on opposite ends. And we talk and we go, yeah, 90% of the discussion we agree on. There's a few things that maybe we differ a little bit on.
Very cool. Very cool. Well, again, where can people find you?
Go to greatmortgagebroker.com, fill out the form. We are really dialed in with getting back to you in a timely fashion, connecting you with whoever's best to handle your situation, depending on what the loan product is and what part of the country you're in. So greatmortgagebroker.com, fill out the form. We'll be in touch.
Awesome. Thank you so much.